Well, good morning, everybody. My name is Rob Godlewski with the Think Small podcast. And today we are joined by Tim Mitrovich with 10 Capital Wealth Advisors out of Spokane, Washington. Tim, welcome to the show.
Thank you very much. Pleasure to be here.
Yeah, you had a big win last night with your Seahawks winning the Super Bowl. Congratulations.
Yeah, a little bit of redemption from the infamous Super Bowl of years ago. So,
Yeah, I understand. I understand. Well, again, congratulations. It was a fun game to watch. Well, let's get started. First of all, we want to talk about how you got started in this business and what led you to be the founder of 10 Capital.
yeah, I think the interest in the business, I didn't claim to have any great plan. I didn't grow up knowing financial advisors existed. We had we had no extra money to be managed in such ways, but found my way into an internship, just kind of helping doing some software conversions and things like that, and really fell in love with it, I think, for a few reasons, but I was somebody who never exactly had a singular passion, but really an interest in a lot of different things. And that's one of the things I love about this job is it's sociology and psychology and politics and economics, and it gave me a chance to really stay interested and involved in all those various different disciplines. Did go to law school even after that internship, get some more experience, did M&A law for a couple years.
Mm.
Came back to where I'd done an internship and eventually left and started my firm. Tried to stay. I wasn't a guy itching to get away, but really felt, particularly as someone who didn't come, wasn't inheriting a book, didn't have a patron saint looking over them, that I had to make my own mark. And the firm I was at, like still a lot of places in the industry, was very sales focused and, kind of old school broker mentality. And I had realized pretty quickly that what was lacking in the industry was education relationship, and I needed to really build a firm around that concept. I just wasn't welcome where I was at. I asked. And so then with notice, I didn't do a 4 o'clock letter or any of that kind of nonsense. Just said, hey, I feel compelled to see this vision play out. And so that was what led to the launch of 10 Capital.
That's awesome. And so 10 Capital launched in 2011, correct?
Officially, we filed paperwork in 11. We started January of 12. Yep. So we're in our 15th year right now.
That's amazing. Well done on the longevity of a startup business. That's kind of rare these days. So tell me about again, about less of a salesy approach and more of a relationship kind of wealth building approach. Tell me how you really started down that path and how it's taken the firm.
Yeah, I mean, to be frank, I needed clients, right? To stay in
Oh,
business.
of course, of course.
But still wanted to earn them hopefully in the right way. And so I had this puzzle to unpack. And again, I think one of the real blessings and strengths, it certainly started off as a weakness, was that I didn't have any real experience in the industry. I didn't have any preconceived notions about what it was. I did my best to listen and learn from a lot of different people, and so you would hear a lot of things like, find your niche, or um, value adds, all these kind of just general euphemisms. And as I really thought on that, coupled with just talking to people, certainly I'm sure I would have been open to having them as a client, but in all sincerity, I would approach them. I would never try to pitch anyone. I would just say, I just need to understand like what your take is on the industry, what your experience is with the
Mhm.
industry, who you working with, um, and I really would leave it at that unless somebody wanted to push it forward, which most didn't early in my career. Um, what came out of that, and I think I'll back into where I began with the niche. Was, yeah, I'd hear people say, my guy tells me we're okay, but I don't know what that means. I don't really know if they remember I'm a
Uh,
client half the time. My spouse can't stand them. The less interested spouse can't stand them. They find, sure, he finds them patronizing, um, and so I'm like, that seems like the opportunity, right? And
Mm.
I think really at the end of the day, I think that's what people are getting at with the niche. I'm sure there could be a certain company um, with some technical aspects to their stock option program. But I think more than that, it's the idea that I know you, right? Advisor to client, and I know what you're going through, and to whatever degree I don't, I want to get to know you, and I think that's what people are looking for, and I think that's even more so than the technicalities, what people are looking for a niche. And the nice thing is, if you don't get connected to some, Fortune 500 company with stock options, I think that's a niche that goes really across the gambit of people. The other thing is we started to really lean into that. We realized that it is that non-CFO spouse, that less interested spouse.
Mhm.
It's probably going a bit too far to say we designed our entire firm to serve that client, but it certainly was in mind because we realized that would get us on the right track. And before we even realized that it was the non-CFO spouses, generally speaking, the wives in relationship, but not always, that women are better referrers than men. We didn't know that at the time, but we've come to find that. And so as we built this um, firm not around investment prowess and machismo and what we're gonna do, and we're smarter than everybody else in the room, but rather partnership, really coming alongside people, education, empowerment. That has given our clients a story to then go share and, taken us essentially from zero to approximately 1.7 billion in a relatively short period of time.
That's that's really a great story and a great approach to developing your business and being intentional about what type of client you wanted to work with. I think that's incredibly important. I talk to a lot of clients that struggle with that approach, right? They want to be everything to everybody, and you know what?
Mhm.
We just can't.
Mhm.
No
Yeah,
matter how great we think we are, or how cool our product is or our service, we just can't. So I
right.
applaud you for laying that out. And so your firm really isn't out there promising high returns. You're really out there promising that you are going to be there for not only that client, but essentially that family
Right.
over the long term of a wealth building life.
Correct.
And,
Yeah.
and that,
Yeah. Go, sorry.
no, go ahead. Go ahead.
No, I think that's just it. We literally start with about a 90-minute conversation, guided conversation.
Okay.
It's not just a random conversation, but it's guided on very specific items to help engage. Again, doesn't have to be spouses, but most typically it is. Build out that plan, can even be an estate plan. We'll even bring
Sure.
in, once a relationship is really established, adult children to talk about a legacy plan.
Mhm.
And so it really is earning your way into that trusted spot, but it's not the most time efficient thing. And I think that's, for a lot of people who just kind of want to get the client on board and get to the next one. It's not fast, but funny thing, like a lot of counterintuitive truths of life. If I spend a little bit more time up front, we have to spend less time going around trying to chase new clients because our clients go out and do it for us. A lot
Right.
of, a number of times, this is not anecdotal, dozens at this point where we're not even done onboarding the first couple and they've found the first couple meetings so unique that they're already referring friends, and now we're in the process of bringing those clients on board as clients. So I think really differentiating oneself, thinking about that, being honest about what is a differentiating factor and what's not, um, is really critical. And then of course we have a very robust event and education calendar, upwards of 36 events a year, from cooking
Oh,
classes to
wow.
lunch and learns to, we have our March Madness event coming up, which is nothing more than shutting down a bar for the day of the first day of the tournament. But again, one of those things I learned pretty quick is I would talk to you and you'd say, "Hey, Tim, my buddy Doug really wants to meet you. I just can't, he's a little nervous to call you. He doesn't want to be pressured or sold or whatever." And I couldn't get that. And so again, that was one of, not the only reason to start throwing these events was, whether it's someone who's gone through our process or someone who's been a long-term client, am I facilitating environments and opportunities for you to make those introductions as well, knowing that a lot of times it isn't just going to be a phone call and an email. And so that's again another aspect of those events is not only earning the right, but then facilitating the opportunity to that introduction.
Yeah. So you may have glossed over it a little bit, but did I hear you correctly? Did you say you're actually getting referrals from clients who aren't officially clients yet? They're still in the
Correct.
onboarding process and they're already actively referring you to new business.
Yeah.
Wow.
Yeah.
You,
Yeah.
clearly something you're doing in that first conversation is impactful. Um, may I
Yeah.
ask, like you said, it's the hard work up front is makes the work in the future that much easier. But how intentional was the development of that initial 90-minute conversation? And how has that evolved in your early stages of running the firm?
Yeah. I think that came along, when we started. And I guess this is still maybe a little bit less common than it should be, but when we started 2011, 2012, the idea of like really asset allocation and even really that was kind of early days of the RIA landscape. I know they had been around for a while, but really not of note. So we would lean into that, quite a bit. Hey, we're going to bring you a lot more than just US stocks and bonds. We're going to help get you exposure to other areas, other managers, and it went okay. But again, as we
Mhm.
continue to think through really those initial process, well, I think we had the heart to want to engage people. We really didn't have a process to engage people. And again, found ourselves, I think hypocritical is too strong, but probably confusing potential clients by talking a lot about relationship and education and then shifting so abruptly into then investment driven conversations. And
Okay.
so as we really started to think through, how could we even improve this further and realizing again, a lot of times the again non-CFO spouse not super engaged. How do we engage them? How do we
Mhm.
make a process worthy of a conversation when you and your wife are out on a date with some other friends that you would bring us up? Like, what can we do to earn that into that space? And so, yeah, it really was a ton of time reading, a lot of research into behavioral finance, understanding how
Mm.
people think about money, the different types of approaches to money, really thinking, stopping, you know, hey, you know, Rob and his wife aren't really asking a lot of investment related questions. They're asking a lot of other kinds of questions whenever we get
Mm.
together with them. Maybe we need to build a process more focused and centered on those other questions, or even be proactive in helping bring those up or facilitating, again, an environment conversation for those to come up. And so that was the shift. And then, building out that process to facilitate that, have very little, essentially none of the first conversation unless somebody else brings it up, be about investing, be about numbers, all about who are you, who is your wife, how have you thought about money in the past, um, what's worked, what hasn't worked, where are their pain points. We do this all a little more tactfully than I'm doing now, but um, and then getting all that, really understanding what their top priorities are and really where their top pains are, and then creating, an action list out of that of, okay, then this is what we're going to help address. We've heard you loud and clear. This is what you want to do. This is what you want to avoid, and really let people know that they've been heard. Once that transpired, again, particularly for the non-CFO spouse that was used to being brought in and getting subjected to Sharpe ratios and alpha and beta and all these kinds of numbers. They go off like, hey, we met these amazing people and they really listened to us and heard what our
Yeah,
goals were and what our fears were, and they're building out a plan specific to that. I'm paraphrasing, obviously. Then that's where
sure.
things really took off. Yeah. So we spent, and some of this I think is probably life cycle of firm and building out community credibility. But yeah, our first 8 years, we were probably at 500 million, and we've added over $1 billion of assets in the next 5 or 6. So
Wow, that's a growth curve that most you know enterprise level CEOs would be very proud of and would want to show their board of directors. So congratulations on that.
thank you.
In going through this process of acquiring a new client and kind of vetting them out, you're not only essentially not selling your product, but you're addressing the pains and concerns in their lives, which I think is the smartest thing that any real business developer should be doing. But it seems like you're almost vetting out whether or not these people are the right client for your firm.
Oh, totally.
Is
You have
is
you
that fair to
have
say?
Yeah. I mean, it tends to be us guys. We're a little bit slower on the uptake than our counterparts, but that come in and what kind of returns are you going to promise me? What are you going to do? How'd you perform against the S&P last year? What should this? And again, not realizing
Yeah.
that, look, I mean, to be clear, we're very proud of our investment process. We think we vet things very well. Um, we also understand it's all relatively moot if you don't have a great plan around it, right? And so that's there. But when people come in, oh, my last guy sucked and he couldn't do this and he couldn't do that, and I think I could do it, and well, unless you think you can do X, Y, or Z, we're just not going to engage in that. It's not how we believe you build and maintain long and pass on long-term wealth.
Mhm.
But I think when you have a definitive process, as we do, I mean, we're very, hey, we go 1, 2, 3, 4. Um, it really builds up a lot of credibility with whomever you're talking with as well, right? Like, hey, we know how to get this done, right? Um, and so what we need to know from you is how we're going to work together, right? And so I
Yeah.
think it does both. It lets the client prospect feel heard. It also conveys to them, hey, these people actually know how to get me where I'm going. I just need to, work with them to let them know where it is, I hope to end up.
Mhm. So you've had a really good run since 2012 when you started. You said your first 6 or 7 or maybe 8 years, you got your first 500 million of assets under management, and then it
Hmm.
kind of hockey sticked from there.
Yeah.
Uh, so, but it doesn't seem like you've had any kind of plateau or kind of, I'm going to say, stagnation of your new client growth. But let's talk about that time when let's say it was 2017, 2018 timeframe when that graph really started going up and to the right. How did you manage not only your firm, your clients, but your employees through that upward transition of growth?
If I'm honest, it was really hard. So I think,
No, but that's you know what? That's what our
yeah,
podcast audience wants to hear.
yeah, yeah. No, it was not without its bumps. I think, we've talked about it a lot, and I don't want to come off as disrespectful to the various colleagues over time, but you don't when you're starting something off, it's very hard to attract top talent because you're new and unvetted,
Mhm.
not only to your clients but to your teammates. Um, you really don't have a lot of money to pay top talent anyway. You don't have a lot of
Mhm.
clients. So, I think my colleague, now partner, Jake, Tim, who has been with me from day one, we just worked insanely hard. I mean, that's the truth. Like really long. He actually moved into the house next door to me, and our wives were friendly, would make fun of us because we were 24/7 on this. That's just the truth. And fortunately, in the first few years of the firm, we weren't married, didn't have kids. So this was it. This is what we did all the
Hmm.
time. Yeah, then as we grew, and this has been continual, and not that we're looking to replace people, but you do realize that not everybody's with meant to be with you the whole time, right? And so we've had great employees who are still and have always been wonderful people who, we had to have some tough conversations and let go, not because they weren't trying, but they just weren't really able to continue to perform at the new levels the firm found itself, which kind of caught us by off guard because I'm making up a name here. Like, well, Jessica's always been great. We know she's loyal. We know she tries hard, and um, we would try to shift positions around, but you're just like, hey, we've gone from minor leagues to the major leagues, and
Yeah.
they can't hit a curveball, and it's not about their character or who they are as a person, and that was something I guess I didn't anticipate. You have other people who just don't want to be a part of that journey and that growth trajectory and the pace. And then you have other people. Our team right now is just fantastic. Who then come alongside. They're excited. They're ready. You've gotten to the point where you're a place they want to be. You're ready for them as well. And so I just think keeping your eyes open to those evolutions is important because as a business owner, you like to think like, okay, I've got that fixed. That's done forever now. I don't have to worry about that anymore. And unfortunately, that's not the case with just about anything in a business.
Right. I work with my clients a lot on the concept of, right people, right seats. And,
Mhm.
and getting the right people in the organization in the first place is paramount. But
Yep.
making sure that they're in the right spots to not only do what you want them to do for growing the firm, but what they want to do also.
Hmm.
And because it definitely is a two-way street, right? And
Yeah. Well, and a lot of those people, I mean, there were, are still really great friends, still friends of the firm. Um, they've kind of said, yeah, I realized I wasn't really there to do it anymore either. Thank you for helping me. So it's a unique journey, but yeah, and I think the other thing too is we all want it to happen a little quicker than it's going to. Um, and it takes a while. And then, but two, realizing you can start to, because so much of that initial oomph to get something started comes out of the founders and key employees. You can get stuck in some habits that, quite frankly, aren't necessarily really healthy for your long-term mental health or relationship health.
Mhm.
And that
Mhm.
need to, I think anyone who founds a firm has probably got a little bit of a control issue to begin with, but then you build them in even more because you're really the only one you can rely on. And then understanding, hey, if I'm going to have sustained success, not just initial success, I've really got to make an emphasis on finding a process, finding the right people, and beginning to turn over those things. And that's really what are we, year 15. That's probably really only been the last 2 or 3 years for me. And it's something that I have to be conscious of like, hey, let that go. We'll see how it turns out. Because you want to jump in on everything, and that's not a process that can keep a firm successful.
So you mentioned that I'm going to say kind of midway through your firm's existence, you started ramping this growth really higher, um, and you realized that the firm was something now that you didn't imagine when you founded the firm, right? It was
Yeah,
changing
I
in
mean,
these
I had
two different
aspirations
paths.
to be successful and that maybe we would get to 1 billion under management at some point. That had never happened in our town, that an independent had done that. Um,
Interesting.
Most of them kind of, and now that I've read a lot more, I mean, there's kind of that 250 threshold. I'm sure these numbers inflate a little bit, and then there's a $500 million, where it takes new things to push through. Um, and And so, tried to stay cognizant of that, look for things that were going to help push us to those next levels. I would have liked to have figured out a lot of this stuff earlier because it really just came at a personal toll. Like you just, you know, uh, had, grinding every day, but, we've busted through.
That's great. That's great. So we're now in 2026 with $1.7 billion assets under management. What does the firm look like in the next, say, 3 to 5 years? Is this hockey stick going to keep going up and to the right?
I don't know. That's a great question. I would say this, for all the growth that we've had, we really have, we'll talk about growth as the scoreboard. We really have kept our eyes on the field. We were cognizant of how we wanted the proverbial game to turn out, but we've focused on blocking and tackling and attempting to do more. We've had some longtime clients that have said, "Man, I can't believe how things have evolved," right? Like we early
Mm,
on said, "Hey, as we grow, we're going to not just accrue that to our benefit, but you're going to see tangible ways in which we will return that to you, our clients, through enhanced education opportunities. We've got an amazing office here where, clients, it's next to an arena. Clients can use it to pre-funk before they go over to a concert or game. We have a gym that clients can use where we have a trainer on staff. And so we've really, spoke to comprehensive wealth, which is certainly about health and legacy and bringing in nonprofit speakers and really tried to facilitate that in
interesting.
a very tangible way. Um, I think the biggest thing I see before me now is really, replicating management. So we've got a great partners now. There's four of us as of now. But really pouring into that next generation. Where I'm the old guy at 49, but uh, already really being mindful of succession, not from a standpoint of leaving, but I think from realizing, hey, at some point a rocket only has so much fuel. Whoever's going to take you to the next level, you need some fresh tanks and some new ideas, and so we're really wanting to foster that in that next generation that they feel heard and empowered to add the next chapters to the story.
Yeah, that's fantastic. And I'm really glad that at your age, which is still very young, that you're thinking about a succession plan. I think that's
Mhm.
very wise. But you're probably having those conversations with your clients as well, right? You have to be. Um,
Yeah, they'll ask how much longer I'm going to do it already, which is a little surprising, but I think they intuit the success of the firm, and most people's dream is to retire. I don't know that that's my dream. I think my dream is to maybe have a little better work-life balance than I've had at various years in the past. And yeah, my kids are still relatively young and have good time with them, but for me, I'm proud of the firm, proud of who we mean, what we mean to our clients, but also our community. And I want to make sure there are people, of that same ethos there to take things over and take it even
sure,
higher whenever I do slow down.
sure. So you've also mentioned that you're what you provide your clients, there's a lot of, kind of circling around them that has nothing to do with financial management, right? You
Yeah,
mentioned a gym and a place
yeah,
to hang out before another event that has nothing to do
yeah,
with your firm. You mentioned
mhm,
cooking classes
yeah,
and March Madness. I mean,
yeah,
that's really intentional. I
mhm,
like that idea, right? You're taking care of the whole human
right.
in dealing with your clients, and whether or not you're actually getting compensated for those services. It doesn't that's not the issue to you. You're not it's not a it's not a line item on your P&L.
Yeah,
Um,
here we are in the investment business. I think this is true of life. Like you got to invest in things where you want to see rewards. Um, very big believer in that abundance versus scarcity mindset. But here we are, the very people who should be walking that talk as much as anybody. I mean, that's what we say we're here to help people with, and then they don't do it. I mean, I hear all the time, "Well, I did an
yeah,
event, I didn't get anything from it." I'm like, "So you did one event and thought you should get something from it?" I mean, we've done
Right.
a handwritten in-house weekly commentary now with video, written since 2015. It's over a decade. We've done no less than a dozen, 2 dozen events that whole, since our existence outside of obviously the COVID years where we couldn't. And so it is that consistency I think that people learn to trust. I think there's two key aspects to making those things successful. One is the consistency I just mentioned. Second is a group that really likes each other. Like has
Mm.
always been a firm that has looked out for one another. And I think people want to be around that positivity. They trust the consistency. They're attracted to the positivity. And again, if yes, we hope to get new clients from some of these things, but if that's your first priority or your first five priorities, like people are going to snuff it out, right? Like we want to
Right.
create something great, just to be great and a unique experience. And by putting our focus there and just trusting and investing in that process and not expecting an immediate return, I think it infuses it with the right, um, energy to then again be something that people want to be a part of, and not only themselves, but then attract those they care about to be a part of as well.
That's great. That's definite words of encouragement and words of advice for our audience. And I know that a lot of people are really gonna relate to that. Along with that, though, have you been able to, back to the what really drives your revenue? Have you been able to expand your service offering or the products you offer to your clients to, I guess, to create that longevity of client or that stickiness?
Hmm.
Have you been able to manage that?
Yeah, I think so. I mean, again, depends on when they came on board, right? But if you were a day oneer, yeah, you got nice people and a well allocated portfolio and a few events, which to be clear to everybody, like
Sure.
weren't all that good. We had to get better at it. Yeah, and then came along a better planning approach with formal financial plans. And these may not be in perfect order, but then now we have six CFPs on staff to
Mm.
help our clients, and so probably more in
Certified
depth.
financial planners.
Yeah, certified financial, so more than just somebody who knows how to input the data, but really to take that deeper. Now we do estate planning consulting is an
Hmm.
additional alternatives, very heavy in alternatives, so new investment offerings that really weren't there. Really spent a ton of time getting educated and understanding that space. Now, like I said, now we're doing the family legacy planning with clients. It's probably our latest big offering where people can bring in their kids and we'll
Mm.
walk through really what mom and dad hope to see transpire with the wealth that they've built, both in the remaining years they have as well as post their passing. And then there's just a lot of opportunities, like I said, really being proactive around bringing in nonprofits, sleep coaches, health experts, opening up the gym, so people can come work out. But again, that idea, we'll talk about the four pillars of a wealthy life: wealth, health, loved ones, friends, family, faith, and legacy. What do you want to leave behind? That's where a lot of charitable components come in. And so if you were to come into our office, you'll see those things actually physically represented. Our lounge is surrounded by various causes the firm supports. You've got the gym. We're bringing in speakers on each of those themes over the course of the year. Yeah, some are market outlooks. Some are, last year we had, and I believe they're both coming back, but a longevity expert and a sleep coach on two different occasions. Nonprofits that speak to the work. What it's great to build all this wealth, but there are a lot of people with a lot of needs. Like, what are we doing to help them? And not every cause might resonate with you, but we want to help facilitate those conversations. And so, you know, I don't know if it's a new service, but I'd like to think it is in its own way because again, having money is great, but if you don't have people to enjoy it with, you're not pouring that back into the community. And I think so true. Money doesn't buy you happiness until you give it away. And experience getting to pour into other people's lives. Certainly, you don't have your health. So yeah, we talk about it, but I think that's in a nutshell, whether it's the events, the time spent onboarding clients, we wanted to be a firm that just didn't talk, but walk that talk as well.
That's that's so great. I love the fact that you're taking care of the whole human, you know,
Trying.
at various levels.
Trying.
No, but I appreciate that, right? It was about 10 years ago that I started getting involved with local charities and philanthropies, and it meant a lot to me, and it really helped me. And
Mhm.
I love the fact that I'm still actively involved with a couple charities, and it's building, something in me that is
Yeah.
worthwhile. And
Oh man,
it's
when you see how, I mean, I grew up, a very small town of 6,000 people. Dad was the
yeah,
principal, incredibly hardworking, very intelligent. Never want to come off as disrespecting, but very much a public servant. There just wasn't a lot of extra. I can remember, tears and frustrations around money, but I was safe, I was healthy,
yeah,
loved. There was always some food on the table. When you see the thing that travails that some people are trying to make it through. I don't think most of us fully appreciate that, and so it's just something we're always trying to continue to get better educated about here. And again, the people who are helping those people, I mean, the amount of patience and care that some people, dedicate their lives to helping those people out. I talk about working hard and bad days here, but um, it's nothing like what some people have to deal with on a day-to-day basis. So yeah, the least we can do is try to come alongside them, partner with them as well, and support them. So
that's great. So your business is mainly focused in the Spokane, Washington, and in the Seattle, Washington areas, correct?
yeah, we'll get little
Okay.
enclaves around the country when a client moves and starts talking to their neighbors. But
Okay.
yeah, the
That makes
epicenter,
sense.
yeah, yeah. So there's a little pocket in Houston, a little pocket in LA, but yeah,
Interesting.
the epicenter is certainly here in the state of Washington.
Okay. So as we keep this hockey stick going up and to the right, with 1.7 billion, hopefully growing to much bigger than that. Are there specific plans for geographic expansion, or is it more just a natural expansion of your local market?
I don't know. That's a really great question. I think there's some neighboring opportunities here in North Idaho. A lot of people moving to North Idaho for quality of life purposes, and
Okay. Yeah.
we've talked about it a lot of times. I don't ever foreclose myself to anything, but I'm always mindful that I'm just as much or more called to be a good husband and dad as I am a business owner, and um, I'm
I love that.
very fearful is probably too strong, but keenly aware of the amount of time and attention it takes in to really cultivate something. And if that wasn't in my own backyard, um, I I I don't know. Maybe other people could do it, but I think I would struggle to maintain that balance.
Okay.
So we'll see. We'll see.
Yeah. Yeah, that's good.
Especially that
Well,
my
listen,
daughters are
we're
9 and 7, so pretty young. They
ah
still want daddy reading bedtime stories, so I like to be there to tuck them in. Mm.
well, it's good that you're probably not one of those dads that every time the suitcase comes out of the closet, your kids get a little frown on their face.
Yeah, I'm fortunate. I don't have to travel. So a little bit coming up here in the few weeks, but yeah, it's the exception, not the rule for sure.
That's good. That's good.
Yeah.
Well, listen, before we wrap up, Tim, are there any
Yeah.
other kind of words of advice or just, musings that you might share with our audience relative to, sticking through the growth of a small to mid-sized business?
I think the only thing I had a young advisor reach out and he wanted to know about events, and I kind of talked to him about a lot of our failings early on because there were, and events were not many people, if any, really showed up, and you wonder if you're not on the right path. And he reached out subsequently and said, I threw my first event, only one person showed up, and after talking to you, now I know that that was a success. And the point I was really trying to get across to him that I would share is I think when you go through and you have all those failures, it's very easy to believe that means you're on the wrong track. And it's the doing the thing that ensures that you are on the right track. So those failures are part of that process. I didn't really have anyone to tell me. I had no options. Quitting was not an option. So, um,
Right.
but for some, I think they think like, hey, I'm just not cut out for this, or I'm doing this and it's not resonating. And there's certainly times to adjust, but there's just a lot of times where, hey, it isn't your first or second thing that's going to be the success. It's the hundredth. And I know that is out there, and there's all the little memes with the diamond mines on the other side of rock walls and all that. But it's entirely true. It's certainly, we'll have people come in and say, I want to build what you built. It's like, man, there was a good decade of sucking sand, like working
Mhm.
really long hours and falling down and, making mistakes to get here. And I think if there's anything that continues to be true today, that was true that whole process was, never a sense of arrival, always a belief that we had to get a little bit better each day. So.
I think that's probably the best place we could leave this discussion today, Tim. So again, Tim Mitrovich, CEO and Chief Investment Officer of 10 Capital Wealth Advisors in Spokane, Washington. Tim, thank you so much for your time today.
Thank you for having me.